Money Talks, your intel on the Philippine markets and the economy. I'm Regina Lay, sitting in for Cathy Yang. In the headlines today, Vice President Sara Duterte pushes back against calls for her allies in the Senate to inhibit from the impeachment trial. It's back to school for over 27.6 million public school students across the nation, and over 37,000 police personnel have been deployed nationwide to ensure safety and order. And 12 Filipinos were injured in Israel as Iran launched retaliatory airstrikes, with the Philippine Embassy in Israel shutting its doors for now. Bright and early on the Monday we go, and over 27 million students nationwide are expected to return to school today for the start of school year 2025 to 2026. Education Secretary Sani Angara will join President Bongbong Marcos in visiting schools, including Epifanio de los Santos Elementary School in Manila. Over 37,000 police personnel have been deployed in line with the President's directive to ensure campus safety. The DepEd says enrollment is up by 300,000 compared to last year. Meanwhile, the Teachers' Dignity Coalition says they're ready for the opening of classes, but urged the government to address ongoing shortages in classrooms and learning materials. TDC Chair Benjo Basas also flagged the lack of support for the new senior high school curriculum, which rolls out in select schools this year. He added that the 7,000 peso medical allowance for teachers, though institutionalized by the Marcos administration, was delayed in implementation. Angara's office said they are working on addressing the classroom shortage through public-private partnerships, or PPPs, with some 100,000 classrooms up now for regulatory approval. And meanwhile, the Alliance of Concerned Teachers, or ACT Teachers, flagged the shortage in teaching and non-teaching personnel that it says continues to plague schools nationwide. In politics, embattled Vice President Sara Duterte is urging the public to give senator judges the benefit of the doubt as the process for her impeachment unfolds. In an exclusive interview with News 5, Duterte said lawmakers should be trusted to fulfill their duty with integrity. This comes amid calls for Senators Robin Padilla and Amy Marcos to inhibit themselves after both publicly opposed her impeachment. The Vice President says that those two should not be singled out, arguing that there are also senator judges biased against her. She also confirmed that her legal team has already received the Senate summons.
Kung disqualify natin, no, ipapa-inhibit natin ang mga bias na senators, madami tayong ipapa-inhibit din. Tulad ni Senator Risa Ontiveros na sa isang public speech niya ay sinabi, kailangan sirain ang mga Duterte. Si Senator Chis Escudero, si Senator Pimentel na nagsabi, ano ba sinabi sa akin? Unhinged. Parang yun ba ang term na ginamit sa akin? Basta ang sinabi ay lukaret, no? Dahil hindi ko maalala yung tama na term na ginamit. So, kung ganun ang pagbabasihan natin, ay madami ang dapat ipa-inhibit.
In local markets, expectations are growing that the Bangko Sentral may soon cut rates by 25 basis points. A Business World poll conducted last week shows 15 out of 16 analysts expect the Monetary Board to reduce the benchmark rate to 5.25% from the current 5.5% at its next policy meeting on June 19. Analysts say cooling inflation and weaker than expected first quarter growth give the BSP room to cut. While inflation cooled to a 5-year low of 1.3% in May, while GDP came in at 5.4% in the first quarter, below expectations. In that Business World poll, only one analyst, that's Ateneo economist Sir Percival Peña-Reyes, thinks that the central bank will keep rates steady. Another thing rattling markets on this new week, the major escalation over the weekend between Israel and Iran. The number of OFWs injured in Israel after Iran's retaliatory airstrike has risen to 12. That's according to Philippine ambassador to Israel, Eileen Mendiola, sorry. Mendiola also told News 5 that 22 Filipinos have been displaced as their homes sustained damages over the attack. Mendiola is personally overseeing efforts to assist over 30,000 Filipinos living in Israel. The Philippine embassy in Tel Aviv will be closed indefinitely as the Israeli government prohibits gatherings and work operations. Over the weekend, some OFWs have expressed intent for repatriation, but Israeli and Jordanian airspace remain closed, halting outbound flights. Now, CBS News in the U.S. is reporting that U.S. President Donald Trump rejected a plan by Israel to kill Iran's supreme leader, Ayatollah Ali Khamenei. But Trump is now suggesting that the two sides may have to, quote-unquote, fight it out.
Well, I hope there's going to be a deal. I think it's time for a deal, and we'll see what happens. But sometimes they have to fight it out, but we're going to see what happens. I think there's a good chance there'll be a deal.
Will the U.S. continue to support Israel in its defense?
We do, yeah. Thank you very much, everybody.
The conflict in its fourth day has already claimed the lives of 224 Iranians and 13 Israelis, of which 90% are civilians. That's according to Iran's state media. And still, on Sunday night, both sides launched fresh attacks, killing and wounding more civilians and demolishing suburbs. Rescue teams were seen combing through the rubble of residential buildings hit by missiles with the help of sniffer dogs and excavators. Clearly, it's going to be a very heavy week coming into this week, so let's flesh all of that further. Joining me now via Zoom, we've got Manny Ocampo, Senior Managing Director at Investment and Capital Corporation of the Philippines, or ICCP. Good morning, Manny. It's been such a long time. Good to talk to you again today.
Good morning, Regina. Yes, a long time indeed.
A long time, and so much has happened in between. Let's kick off with the news over the weekend with the major escalation between Israel and Iran. Unsurprisingly, what we're seeing this morning is oil prices jumping. In fact, they jumped more over the weekend. It's since paired gains. Take a look at, we've got futures for Brent crude and West Texas Intermediate rising, as when I last checked, up by at least 1% each. Like I said, they jumped more during Sunday, but have since paired gains. Now there are calls for oil to hit maybe $90, maybe $95 a barrel. How is this going to impact the Philippines and its inflation projections? Here we're looking at 75, just a little over 75 for Brent crude, and that should be $74 for West Texas Intermediate. Sorry for that typo, but that should be 74. But go ahead, Manny.
Yes, well, this will definitely impact inflation, especially if we don't see it sustained, Regina. And I guess that will also impact BSP's own actions on rate cuts, anticipating maybe inflationary pressures beyond I'd say beyond the first half. Beyond the first half.
And that's what's concerning about this, I suppose, because it doesn't seem like there's a solution or a détente in sight. You just heard U.S. President Donald Trump saying that sometimes they need to, quote unquote, fight it out, although he is hopeful for a deal, of course, but at this point in time, it doesn't seem like either side is ready to back down. How concerning is it? When you say that it should eat into the inflation projections, how concerned are you for your clients' portfolios?
Well, first, I think, again, oil hitting 90 and all that, we'll have to see. But, we think there may be some other supply coming out on oil if things do pick up. Other other suppliers will provide oil at some point in time at the higher prices. So the jump in oil prices maybe will go up definitely, but I don't think it will go up in the leaps and bounds that we may we may see. Now, if the conflict between Israel and Iran become protracted and maybe other players join in, well, that's a different ballgame altogether.
In light of that, do you think so? At this point, most economists and analysts are expecting that the BSP will cut rates when they meet this week. In light of everything that's happened in the last 4 or 5 days, do you think they should carry on or change course at this point?
I think BSP has room to do the rate cut this June. Now, beyond June, that's something else. I think BSP is going to try address, lower rates to, shall we say, provide a base to stimulate economic activity. We've lagged behind the growth, GDP growth numbers in the first quarter with the rate cut. The hope there is that it provides a base now for government and private sector to pick up on economic activity, maybe in the second half of the year. So the question there is August. What will the next monetary board meeting in August? Maybe we'll see what happens.
You're right. There's a lot of variables that's hard to predict at this point. And you know what else is coming up in July is, of course, the impeachment trial of the Vice President of the Philippines, the first such impeachment in the country's history. One of the senators in their interpellation last week already mentioned this, which is that investors are, I think it was Senator Robin Padilla, in fact, brought it up that investors are already looking at this with a bit of trepidation because, of course, that would mean that the Senate will be tied up whilst this is going on. What is your view on this? How are the markets looking at this?
Sure. The political noise is always something worrisome in the sense that it provides uncertainty. But I think business will continue to move forward regardless of how the impeachment proceedings move forward. I think maybe a bigger thing to watch out during these proceedings would be mass actions. Will people go out to the streets? Maybe that's something we'd be a little bit more worried about if it comes to that. But if things remain quiet, I think I wouldn't say a non-event, but the impact of the impeachment trials may be a lot muted than initially expected.
Manny, flesh out that thought for us. Why is it more concerning pag nagkaroon ng mass action? Why would it hit the economy more than all this political noise?
Okay, when people go out to the streets, that's when maybe foreign investors starts worrying because that's something maybe there people will get worried about that, especially foreign investors. Now that people are going out to the streets, it creates that kind of uncertainty, which in other markets that is not present. So again, choice whether do I go with Philippines where there's growing unrest, growing uncertainty, or do I go to somewhere else where maybe things are a lot more quiet or stable?
Especially at a time like this, no, when there are hot wars going on in at least 2 places in the world, and also the prospect for global conflict is on the rise. So in this kind of scenario, how do your investors hedge? I mean, outside of, I guess most of the investors are running for gold, which is why we're seeing it shoot up to record highs. But how else would you hedge in an environment like this?
People will probably shift to, they'll find a balance between equities and fixed income securities. And that's what we've always suggested all this time. the equity markets may, provide too much volatility at this point. So we'll wait it out and see. So in the fixed income market, with the anticipated rate cut, again, that's another action that we want to take a look at, a new base, etc. If you're invested in most of the preferred shares and REITs listed right now, they may see some kind of uptick with the rate cut. Given that yield expectations or yield requirements will be a lot lower this time around with the rate cuts. So, we continue to tell people to, find a balance on fixed income. REITs maybe provide the, a bridge between equities and fixed income in a certain sense because they will probably benefit from the rate cut scenario, Regine.
Break down that point about excuse me. Break down that point about fixed income for me. What's looking good out there? Are T-bills, Philippine T-bills, and notes still a good idea? And also the U.S. Is it still a good idea? Is it still the safest fixed income out there?
Well, the U.S. Really only because there's nobody else, and people will still benchmark against that one. On the Philippine side, there are quite a few private sector issues that have come out lately. Bonds, preferred shares that we like, and provide some kind of a decent premium over Philippine, the treasury notes or treasury bonds. So we look at that very closely. Some privates are pretty much comparable already as far as risk orientation is concerned.
With the privates, possible to give me some names, Manny? I mean, which private fixed income products are looking good out there? And also related to that, does that mean that you are then bullish on their earnings prospect, even amidst the whole tariff issue?
Sure. BPI recently came out with their CNAG bonds, and that should be, I think, listed already. Ayala Corp will be coming out with their own preferred shares and a few others. No?
And the global trade war, the tariff possibly kicking in soon. If not, I think they have kicked in already, right? Because we were just given a 90-day reprieve, but 17% is what we're looking at. So the tariffs shouldn't eat into any of these corporates' growth prospects?
No, I think people will adapt to those. I mean, Philippines in particular, we're maybe not as going to be badly hit on the tariffs compared to other countries trading with the U.S.
Okay. All right. Very good on that point. On a positive note, we will lead the conversation. Thank you so much for your time and your insights this morning. Manny Ocampo, Senior Managing Director at Investment and Capital Corporation of the Philippines, or ICCP. I hope to talk to you again soon. There are still talks coming right up. World leaders gathering in Canada for the Group of Seven, or the G7 Summit. Keep it here on One News. Welcome back to Money Talks. I'm Regina Lay. The group of 7 leaders have begun arriving in Alberta, Canada for their annual summit with tariffs, Russia, Ukraine war, and, as of late, Middle East tensions very high on the agenda. Australian Prime Minister Anthony Albanese, British Prime Minister Keir Starmer were the first to arrive in Canada for the 3-day affair. Fissures between member countries have only deepened since Canada last hosted the summit 7 years ago. Part of that is due to Trump's global trade war as well as his threats of annexing Canada. To avoid clashing with Trump, diplomats said Canada has ditched issuing the traditional joint communique. One analyst told Reuters that the host of issues defining this year's G7 seem to be both calculated and self-inflicted.
The crisis that we are in now is being caused by the Americans with the tariffs. The changing nature of warfare and the overall international security environment is changing, as we've seen with the success of both the Ukrainian and the Israeli attacks. That both the Ukrainians and the Israelis would have had to have made is what is the impact if we do this before, after, or during the G7. And so obviously they're making some form of calculation. They're thinking this gets them on the agenda and they want to be discussed amongst the G7 nations, or they don't care.
Some leaders will use the G7 to hold private meetings and pursue their own agenda, while newly elected South Korean President Lee Jae-myung is open for trilateral talks with the U.S. and Japan to discuss trade. While Japanese Prime Minister Shigeru Ishiba will persuade Trump to drop tariffs hitting Japan's auto companies. The escalating conflict in the Middle East dragged down U.S. markets last Friday, unsurprisingly, with the Dow falling by a little over 1.7%. Take a look at that, sitting at around, 42. The S&P 500 also sliding by over 1%, sitting at just under 6,000 at the moment, with the Nasdaq also declining by over 1.25%, now sitting at just a little over 10,000, if I saw that correctly. Benchmark 10-year Treasury yields rose to 4.423%, while gold, as we were just saying earlier, is notching up more gains, now sitting at around $34.31. That's $3,431 per troy ounce, which is, as we said, a record high. Stock futures also rising amid the growing conflict between Israel and Iran, with the Dow, the S&P, and the Nasdaq all up by a little over 0.1%. That is expected to inch slightly higher this coming week, with the U.S. still being seen as safe haven amidst all of this risk-off conflict. Risk-off sentiment, I should say. Asian markets, though, let's take a look. Climbing the first hour of trading this Monday, with the ASX 200 up over 0.2%, sitting at just a little over 8,500. Kospi just also roughly the same level, now sitting at just under 3,000, and the Nikkei 225, 38,000, a little over 38,000. Closing up at least trading at almost 0.8, nearly up 1% at the moment. So the question for the Philippine stock markets is, can the benchmark index return to the 7,000 mark? One analyst is optimistic that the local bourse will. Rustine Mercado, she's the research director at China Bank Securities, told Business World that the PSEI could recover to the 7,000 level this year on the back of strong earnings growth in listed companies. And that is something that our guest earlier, Manny Ocampo of ICCP, also echoed, saying that corporates here are more resilient amid the trade war. But other analysts like Jared Tin of Dragonfly Securities forecast that the market could only breach maybe at around 6,700 by year end, still due to tariff uncertainties. This Monday, the PSEI has opened lower, sitting at, it's barely moved from the Friday closed, sitting at 63.75. at the moment, down 0.3%. A lot of risk-off sentiment, as we were saying this week, with the growing conflict in Israel and Iran. All sectors are in the green except for services. Meanwhile, the Philippine peso opening a tad weaker as well, now sitting at around 56.25, also barely unchanged from the Friday close. The peso returned to its 56 level against the greenback last week amidst the growing tensions in the Middle East, with most investors running back to the dollar. The dollar is still sitting at a 3-year low, but still, in times like this, it is still perceived as a safe haven asset, thereby dragging the peso down with it. Peso is actually one of the worst performers among emerging markets currencies last week, with traders still looking for a catalyst on the horizon. But at the moment, it's still very much susceptible to the global conflict and the trade war sentiment. And in line with that, the Philippines' current account deficit ballooned to over $4 billion in the first quarter. Data from the BSP show that the deficit surged by 105% year on year, hitting $4.25 billion from $2 billion last year. As a share of GDP, the current account deficit jumped to 3.7%. That's nearly double the 1.9% recorded in the same period last year. And in a statement on June 13, the central bank attributed this to faster growth in import spending compared to exports, thereby widening the merchandise trade gap. The BSP also flagged a drop in net service revenues, citing lower transport receipts and increased outbound travel spending. However, this was partly tempered by higher remittances from OFWs. The BSP now expects the full-year current account deficit to hit nearly $20 billion in 2025. That would be a record high. And if the current account balance is in deficit, that means the country is spending more than what its savings can finance. Maya is on track to stay profitable this year, driven by strong gains from its wallet, merchant, and banking segments. The digital finance platform, partly owned by telco giant PLDT, continues to show growth, says PLDT Chair and CEO Manny Pangilinan. Pangilinan said all revenue streams posted positive earnings before taxes, with profits extending through May. He also said that Maya's EBITDA will remain in the green beyond the first quarter. Just one quick disclosure on this story: PLDT and Signal, the owner of this channel, are both part of the MVP group. And on that note, or at least on that positive corporate story note, that is it for Money Talks today. I'm Regina Lay. Catch us again tomorrow at 9:30 a.m. here on One News. Have a great week ahead.